Mic check 1, 2. Hello and welcome. Welcome to today's analysis session. Today is 11th of April 2025. And it's very interesting because we have seen a lot of activities in the financial markets today, something we have not seen. Personally, I haven't seen something like this. I started trading back in 2020, late 2020. I was not there to witness the 2017 markets whereby Trump had just come into office. I witnessed COVID. I witnessed Russia, Ukraine. I've witnessed inflation. I've witnessed Middle East tensions, but I've never seen something like this in the financial markets. Never, 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 never. And it helps me become a better person because we tend to understand the world in general. We tend to understand the markets. Currently, where I'm at, I'm in a position whereby you become a sponge. And this live stream is not only for, I'm doing these live streams for me. I'm doing this for me. I want to make it public, share my journey, but I want to come back to these videos in the next few years, see my journey progress. I've always loved documenting. I've been journaling for quite some time now. It's planting season where I'm at. Currently, at the moment, it's raining. It's drizzling. It's Friday, and I'm glad I chose this route. I'm glad I'm going to be in this journey, and I want to share it with everyone. I have been impacted in my life, and I want to impact other people also. It's not easy. Honestly, it's not easy because some people take it positively, others, everyone's opinion is valid. The most important thing I do believe is we reach our destinations as one. If it's building homes for our loved ones, we build them homes. If it's buying things for ourselves, we gift ourselves things. That's the most important thing that we need to be looking at currently at the moment. It's very lonely. It was lonely for me. Sometimes up to date, I feel like it's still lonely. People come to me, I help them. I've given out a lot of energy, a lot of information, but I have trouble going to other people. I have people I can go to. The people who have really helped me. And one thing I can say about Forex is whether or not you make money, whether or not, doesn't matter. One thing I can guarantee every person that starts this journey is that you will find yourself. You will find yourself. I'm not that spiritual, but when Jesus was preaching, he did mention the kingdom usually comes from within. Maybe what you're seeking is not out there. Maybe. I don't know. This is just my own opinion. Maybe it's not out there. Maybe it's within. Let's start the stream. Now, today is on Friday, and I want to let me share system audio starting us off with my internet is good, even though it's raining so drastically over here. It's hammering. I want to start. I've not looked at the charts today. I haven't looked at the charts today, but I want us to start with Forex Factory because this is where everything usually happens. So we've just had PPI come out in the previous 5 minutes ago. The data has come out negative. We had CPI come out, yes, was it yesterday? CPI came out on Wednesday, sorry. Oh, damn. Let me get these. Let me get my books in order. So we had CPI yesterday, whereby it did come out negative, but we were looking at the year-on-year release, and we were like, okay, so the central bank, if I was to break it down, inflation once again, the central bank wants this number to be below 2.0 so that they can continue lowering rates. But the trajectory that we are seeing is positive in terms of inflation is cooling down from highs that we have seen at nearly, this was 9.1, the highest we have been in quite a long time. If I can have this data, inflation has never been this high. I do believe this was a record high we did have at, it was 9.1% when just after COVID. Theory has it that the United States printed a lot of money. They printed a lot of money. And basically, the more you print money out of thin air, for the people who worked so hard to get that little, all of a sudden it is devalued. Now that raises inflation because if I was to buy, let's say, tomatoes, I need more papers to buy the same tomato than compared to before. So what we have been seeing with inflation is a cooling down, and this is what the central bank, the Fed Reserve to be exact, wanted to see in the financial markets, whereby they want to lower rates if these numbers continue falling down. So yesterday's data was very crucial to us because it showed us, yeah, in the long term, we are headed in the right direction. If you look at food prices, we did look at core CPI and CPI itself, whereby, yes, we are headed in the right direction. And this brought up the question whereby Trump is pressuring Jerome Powell to lower the rates as soon as possible to stimulate the economy. Remember, lower interest rates mean what? It's the central bank advocating for people, come take loans for us. We are going to offer you loans at a cheaper price to stimulate the economy. But at the same time, it causes massive damage to an economy in general because treasuries become weaker, bonds become less attractive. So foreign investments into a country become lesser and lesser. 30-year bond auction we did have, it wasn't so with bonds, this is something really good to be looking at, okay? So there's the face value. You want to look at the first number is the interest rates of the bond sold, and the second number is the bid to cover ratio. As you see over the next 30 years, yes, we did see a slight increase of interest and at 4.81, which is not that bad, which is not bad, but there could be more that we can see in the financial markets. And we are going to look at treasuries in the next few and see what that meant for us as traders. But moving on to today, PPI did come out negative. Now, PPI is producer price index. Yesterday, we were looking at consumers. Today, we are looking at producers. Now, this is the change in price of finished goods and services sold by producers, excluding food and energy. Usually, there's going to be two sets of data. The one is going to be the core, the other one is not going to be the core. So the one that doesn't have core is going to include what? Food and energy. The other one excludes food and energy. so that to get a balance of, okay, if we omit the volatile data, what makes this data to be unstable, including food and energy? Because as I've mentioned, we can be talking today about, let's say, for example, egg production. And I've spoken about this, whereby in the United States, in the previous government, especially Joe Biden's government, we did have a problem with eggs, whereby those these those measures set in place whereby if a farmer detects that there is a disease, the government will pay you to exterminate all of your birds, all of the flock, and then they give you compensation for it. Now, when Trump came into place, he saw that, and he wasn't a fan favorite of that, because it is said that some farmers did misuse that opportunity. But this brings about the question whereby today a tomato can be selling at $1. Tomorrow there could be a disease out of nowhere, and then all of a sudden the food industry is shaken. So that's why we usually have two sets of data, usually the core and the data itself. Now, looking at the core CPI, which is going to exclude food and energy, the same thing can be seen with CPI yesterday, whereby food and energy seems to be stabilizing in the United States, but the CPI and the PPI itself, the data itself in general, does not look that healthy. Now, if we can go to the PPI itself, which includes food and energy, there's usually a document here. Let's go over this document. On Fridays, I like trading after 4 UTC plus 3. So another inflation report underlines the strength of the US economy before Trump's tariff hails. Now let's look at the data itself. Now this is .government. As you can see here, it's .gov, meaning this is the official government document that was released at 3:30. Now the PPI index for final demand increased 0.4% in March, seasonally adjusted. The Bureau of Labor Statistics reported today. Now this is the body in charge of gathering this information. So final demand prices increased by 0.1% in February and 0.6% in January. On an adjusted basis, the index for final demand advanced 2.7% for the 12 months ended in March. In March, over 70% of the decrease in the index for final demand, remember you're looking at producers, can be traced to prices for final demand goods, which fell 0.9%. The index for final demand services declined 0.2%. Now, prices for final demand less foods, energy, excluding food and energy, and trade services edged up in March after increasing in each of the previous 3 months. For 12 months ended in March, the index for final demand less foods, energy, and trade services advanced 3.4%. Now, looking at this data, it's a lot of data, yeah? You cannot go through all this data. That's why for us, we want to look at data related to this. So you come here and ask yourself, oh, at the moment, people are still digesting this data. The markets are still digesting this data. After we have seen what happened with the markets right now are more sentimental compared to even fundamental. Technical analysis, it's just looking for entry and exit points, but zones right now are not working. Zones are not working. These ideologies that we have had in the past, they seem to have changed because the markets right now are more fear-based. And whenever there's fear in the markets, there's usually an uncertainty into how people are going to react. Okay? When you're studying the algorithm, let's say, for example, if you're studying ICT principles, it depends on if it's a level playing field. Okay? The algorithm in a normal circumstance, in a normal setting. But right now, what we are seeing in the markets is whereby we are being moved by sentiment. What is that guy going to say? What is this guy going to say? And to an element, technical analysis right now proves to be unreliable, but it needs to be not to be overlooked, because at the end of the day, you need to have a stop loss. At the end of the day, you need to have an enterprise. At the end of the day, you need to have a take profit. So you ask yourself this question. This question begs whereby, what are you going to do as a person? So with the PPI, I want us to go to the charts directly. Commitment of traders is going to be updated later on in the day, and I would want to look at the data. But if I was to look at it right now, because I want to build these mental images so that in the near future, I know what I'm getting myself into. So if I was to go to metals and others, so these, if I've never spoken about commitment of traders, now this is CFTC. As you can see here, it's also cftc.government. So this is a government website. Huh? This is not owned by anyone. Now, the commitment of traders is a document whereby the government, you have to, as a trader, even brokers, wherever you are, wherever money is involved, you have to be accountable to what you're doing. So the commitment of traders basically asks institutions, these hedge funds, basically the big players, to file in their positions where they are currently at the moment. Now it's lagging data because this data is usually updated every Tuesday, but it will be made available to the public every Friday. Now it's because of efficiency reasons. Back in the day, this was prior to the internet booming era. There were these what you call trading floors, whereby all traders will be in a place. Let's say if you're a financial institution that you're trading, you will have a place whereby you could be trading. They were used to call trading floors. So within the trading floors, what used to happen is that if I can know that someone is selling X amount, I can buy more than that amount to offset what they're doing. Technically, this is what I'm saying. If I had a problem with the traders at that point, if I didn't like that guy and I saw that person executing in the market, let's say $1 million buying, I can sell $2 million just to put him in loss. So the data was delayed so that it brings about efficiencies, because wherever money is being pushed, there has to be some sort of efficiency and secrecy. I cannot execute a position right now. It's not like live trading. We are dealing with very small lot size. Huh? When you're looking at the scale of what these people are doing, it's quite significant. If you hear someone buying at least 7 billion, we're going to calculate it in the next few. $7 billion worth of gold. That's quite significant amount of money. And it opens yourself up to people around you whereby you could be vulnerable. No, so the data that we are going to see today, later today, being updated is actually data of 8. Now remember, if I was to go to CFTC and then I go to metals and others, I want to go to disaggregated futures only, because institutions usually trade mostly. They do use options, but I tend to look at futures only because it's much clearer in terms of how you're looking at data. So if I was to go to commitment and then I go to gold, so as you can see, this was the data that we were very interested. And what I usually like doing is that I take screenshots of these. So, yeah, I think I'll have to edit that part out. So CFTC, this is when 11th April. Now, what this does is it builds mental images, whereby where were we last week? Where are we going to be this week? And what to look out is, with the short positions, we have seen 24,061 short positions being added. And on long positions, we have seen nearly 8,000 positions being offloaded. So for this data, remember this data was as of 1st April. Huh? This was even before Trump announced the tariffs last week. So the tariffs were announced on Wednesday. Now this was data as of 1st. So I want to see what institutions did on from 2nd, technically from 2nd till 8. What did these guys do in terms of the financial markets? How did they push prices? How did they move money around? Now, this was quite significant amount of money. If you look at it, this was almost if we did the mathematics calculate, if I was to pull up a calculator, so prices of gold, let's say average of $3,000 an ounce times 100 to get the value of one contract. So one contract is going to be $300,000 multiplied by 24,000 positions. So this was around 7.2 billion. $7.2 billion from 25th March to April 1st. So this was it from 25th March to April 1st. We have seen more than, this was just short positions. Huh? We have not looked at how many long positions were offloaded. But if you can take a wild guess, this is more than $10 billion. Huh? That's quite significant. That is quite a lot of money. And we have seen an uptick in the number of participants that are into trading gold currently at the moment. As you can see right now, we have 106 traders on long positions and 24 traders on short positions. Now, this is what we would want to look at. This is the data that we want to look at in the near future, what it's going to be, how are the changes going to be after in the next few trading sessions. Now, if I was to go to technical analysis, so this is gold on the 5-minute time frame. I want to start on the daily perspective to get a picture. Whenever you're analyzing the markets, it is advised that you start on a higher time frame, moving down to a lower time frame. I've never seen this happen on gold ever since I started trading. 2,500 pips in 3 days. 2,500 pips in 3 days. If I entered a 0.01 position, that will be $250. If I entered a 0.1, that was $2,500. If I happen to have caught that position there with a one lot size, that would have been $25,000. Now, no one knows what's going to happen next. That's the beauty of the financial markets. But history has it, rumor has it that someone got really rich as a result. A few individuals, not many. I cannot say because most of the people actually lost money. But what I can say is that I am certain, I am certain there are a few individuals right now who have made the most amount of money they have ever made in their financial lives. People have made generational wealth. Life is like a coin. It's like a coin. It has two sides. You just have to pick which side you're on. But this is the best thing to understand about how the financial markets work. This is the perfect time to see the world as it is. Stop complaining about it, embrace it. Take it in. Look at this, what's happening. Ask yourself, can I replicate it? Like if this was supposed to happen, let's say in I'm from Kenya. If this was to happen in my country, then I can pick up what happened in the past and apply it to the future. Now, whatever happened in the past is not an indicator. It's not an indication of what will happen in the near future, but I'm certain that if this happens all over again, I'm going to be in a much better position to understand what's happening. So I want us to look at gold currently at the moment. Now we are here. Now I'm asking myself, yes, prices has made 2,500 pips to the upper side. Could there be more? But I have to ask myself also, could it be extended heavily to the upper side? Like this is very inefficient. Eh? This is what we call inefficiencies. But we cannot speculate that the market will go down. If at all there is more where this came from, I'm asking myself, could there be another push? Because majority of the people are looking at these charts and then they're like, ah, it's bought too much. It has to sell. And when you zig, it zags. When you zags, it zigs. So for me, what am I going to do? No, I really like this time that's coming up, especially 320. Uh yeah, right now it's 320. When there's DST, it's usually 420. But there's what we call COMEX open. COMEX, it's the largest. This is why when I'm looking at CFTC, I usually look at CME. I usually look at Chicago Mercantile Exchange so much because CME is the biggest exchange for derivatives in the United States. So they have an opening time. It's usually 20 minutes after New York opens. So right now it usually opens at 320. When there's DST, it usually opens at 420. Very good times. Very, very good times. And if you can go to the 5 minute time frame, and I would want you to backtest this. Huh? I'm not here to spoon feed people, but if you look at the charts at 320, you're going to see a pattern, a very interesting pattern. Because at the end of the day, when you're looking at Forex, it's a chart of price against time. No? So if you look at 420, 320, sorry, so around somewhere around the 320, there's usually some pattern in the markets, especially raids of liquidity, whereby there's a very high likelihood that the market will come to either highs or lows at 320. If you look at this candlestick here, this was 320, 330, somewhere around that region here. If you go back in time, 320, 330, where was 320? Somewhere around this region here. You can see a very, very interesting pattern in the markets, especially Tuesdays, Wednesdays, and Thursdays. Fridays, not so much, but sometimes, yes, it does. But if you look at the charts at 320, that's usually the time that COMEX usually opens. And it's just like I remember in high school when we were going to be served lunch. I remember the lesson before lunch was one of the worst, especially mathematics. Studying mathematics and then you're looking at a clock. Our classrooms had clocks at the front. So you know it's 5 minutes to lunchtime. You're very hungry. You cannot wait for the bell, and then the bell rings. There's usually this commotion. The same thing happens with the financial markets, especially with New York. There's usually this bell that rings. Whenever the bell rings, there's a lot of activity that comes into place because the markets are now officially open. Order starts coming into place, and then the market starts gyrating. It's human behavior. There are patterns to how humans behave. Now, there's an element of unpredictability because you can never think that you know the next move. No one knows what's going to happen next, but you can anticipate, okay, probability has it that if X and Y aligns, there's a possibility Z will come after. Okay. And that's what you want to look at in the financial markets. People are looking to sell gold. I'm not looking to sell gold. I'm not looking to sell gold. Because what we have never seen such a thing happen. This is one of the biggest rug pull we have ever seen in our lives. And I'm telling you, there's a lot of institutions who are making money as a result of this. Look at this. And there could be more. There could be so much more where this came from. Looking at the 1 hour time frame, we have less than 1 minute for this candlestick to close. I want to see how it closes. Currently, at the moment, we are at all-time highs at around 3,200 and something dollars an ounce. And this is whereby you start looking at psychological numbers. Huh? If you look at where the market closes, it's going to close around a psychological number. Let's say this one closed at 31.75. On Wednesday, going to Thursday, the market closed at 30.80, somewhere around 30.80, somewhere around this region here. So the market opened at 3,080. If you come to this point, the market opened at 2980, somewhere around that. You can, it doesn't have to be accurate, but you can see what I'm trying to push out. The market usually goes from zones to zones, zones to zones. That's how money usually moves in the financial market. It moves from regions of liquidity to regions of liquidity. So if I was to look at this, because the ceiling has already been broken, huh? The ceiling has already been broken. I'm asking myself, what could be the next potential target the prices could come to? Now, if I was to look at this would have been 2040. Now, from 32.33 to 32.40, that's quite significant, huh? This is almost how many pips? Like 60. 60 pips is not that bad. Is it 60? Yeah, almost 60 pips, which is quite the tradable range, huh? I do believe you can make money even trading 30 pips a day. If you can be finding consistently anything above 30 to 100 pips a day, you can be very, 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 very profitable in the financial markets. Don't look at the 2,500 that has left you. Look at what can I get in the next few trading sessions. So looking at gold, I'm anticipating that this candlestick. Now this is my bias on gold today. I like the way this candlestick is forming. Within the first 5 minutes, I've taught a few individuals about this strategy. If this first 5 minutes, so this is where I'm looking at the 1 hour candlestick. Yeah? I'm anticipating this 1 hour candlestick to target at least 32.40. So this is what I'm going to do. I'm going to enter a buy position here. My stop loss is going to be very subjective. Very subjective. I can have at least a 1:1. I can do away with that. But this execution, I want to wait for the next 5 minutes. So this is a strategy that I like so much. This is one of my best strategies. A very simple but yet so effective strategies that I like. Whereby I'm asking myself, okay, I like the way the candlestick is printing. I'm anticipating this candlestick to print bullish. So I'm asking myself, if it has opened here within the first 5 minutes, it goes down, creates a low. What are the probabilities that within the hour elapses, this candlestick is going to make a high and then finally a close? So what am I gonna do is enter a buy position. Okay. So stop loss is going to be, so this is my entry price. I've been filled at 20, 32, 20, 32, 31. Actually, that is the same price I've been filled in. So my stop loss is going to be at I want to have it at these lows at 32.23. So my TP, I'm not going to have it. It's going to be time based. So I'm going to leave it. So let me take a screenshot of this. So the moment it reaches such a point, what you can do is just wait. Remember, the information within is just for educational purposes. Okay. But so yeah, that's going to be it for gold. Huh? Now looking at US 500. Now let's do some analysis on the assets for. This was a really good execution. This was a really good. This was a really, 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 really good planning. Fibonacci. The markets usually respect Fibonacci because mathematicians. It's quite a theory on its own. Huh? It's quite a theory on it. I don't want to go into that because it's going to be very. For some people, it's going to be very. It's going to be very. It goes against what you believe in. Huh? But the Fibonacci is a very good tool to look at where the market potential reversals in the market. So US 500, yes, we did come back into the golden ratio, which was between 61.8 and the 50% region. So if you want to look at Fibonacci, this is my settings. This is what I'm currently looking at, whereby I just only have three levels. Some people don't consider the 50% a level, huh? But it's a midpoint. But for the levels, I do have the 0.618 uh, and the zero point 0.5. Obviously, you have to have a starting point and an ending point, but this was it, whereby I'll be looking for US stocks to continue rallying further to the upper side, take a breather. If we do close above this region, this gap that we had last week Friday, this could be very crucial. But if we do have a candlestick that closes below somewhere around that region, then this could potentially be worrying in the financial economy. But what I'm anticipating is that this candlestick will close at least bullish for this week because of the rug pull that we have just seen. I call it a rug pull because I do believe it was Wednesday. Walter Bloomberg posted on his X account that the White House is considering pausing tariffs for 90 days. And then the following day, people deny that claim. There was all these speculations. No, 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 it's not accurate data. The White House actually denied that information, but they kept it. They didn't deny it necessarily, but they didn't comment on it. Huh? Then the following day, now, which I do believe was yesterday, then all of a sudden, yes, the White House is considering imposing 90-day tariffs for all countries except China. And then the markets blew up. This move here, it was this move on Wednesday. So the data came out, the news started being propagated around Tuesday evening. The market sold. On Wednesday, we had the biggest move we've ever seen in our lives. So maybe there could be more coming from that in the next few. Nasdaq, same thing happening, whereby it did respect to the Fibonacci level, which is between the 61.8 and the 50% retracement region. Now looking at US 30, same thing. This is the beauty of how the markets do move. It can be predictable. You don't have to look at a lot of data. You don't have to look at volume charts. You don't have to look at so many things. Just look at what's in front of you. The Russell did take a correction. I do believe it closed below the 61% region. Yeah, for the Russell, it did close below the 61, but the daily close was in between. Now, this is whereby I look at closing prices. Huh? Whenever you see candlesticks of this nature, look at where the markets closed yesterday on Thursday, which is just in between the 50% and the 61.8% region. Now, moving on to Friday, the markets has been playing around that region. We do have a trend line forming, and I will want to see how the markets is going to interpret this data around this region here. If we do break to the upper side, this could signal that a move further to the upper side is going to be very likelihood, whereby the Russell could continue moving to the upper side, going back to where it had been initially. Remember, the Russell 2000 is 2000 medium, small. It's not even medium, but small cap stocks. So these are very small stocks, and these usually are very, very volatile in the financial markets. You can see during these 2 hours, we did see quite the spike in the Russell. Now, moving on to treasuries, treasuries have taken a beating. Yesterday, we did have a correction, but today opening, treasuries are losing. Now, treasuries are very good because this is what the government is essentially a business. Huh? The government is a business. And treasuries, so if you buy treasuries and bonds from a government, basically you're giving your money to the government, they go do business and then they pay you back in return. So if you see there's a slow or there's a massive offloading, this is offloading of treasuries, whereby people are selling treasuries. Now this is 20-year treasuries. Huh? This is 20-year treasuries. We have seen a massive dump from Friday the 4th, April 2025 to date, from nearly 94 to currently trading at 86.43. Now, this is very alarming, and we're going to see when the market. So, officially this market is not open for the treasuries. But if it does open, we want to see, okay, what is the uptick? Are people losing confidence in the US economy? Because for the longest time, the United States has been seen as the safe haven. Not even gold, because gold was offloaded as the gold standard by Nixon in the 70s. And from the 70s, the most stable currency was the United States dollar. And if you look at price action, if I don't know how long it can take me back, if I can go to the monthly time frame. Okay, so it starts at 2002. You can see how the economy generally peaked from the last time we were here, disregarding these regions, was back in 2009, and this was during this was the aftermath of the this was during the financial crash, the market's crash of 2008. We are back into that territory very many years later, very many years later. From 2008 to date, that's when we have seen the markets coming back down. So there has been massive offloading ever since 2020, and this can be attributed to China did hold quite the significant amount of bonds and treasuries denominated in the United States dollar. But of late, we have seen massive dumping of US treasuries and people opting for gold. If you can look ever since 3rd February 2020 and you look at gold, February 2020, you can see how gold gained, but at the same time, treasuries did what? Did lose quite a significant amount. Now, this is very interesting. It shows you where we are headed to as I like using we. I don't know why. It's like I'm an American, but sometimes when you're trading, you feel like you're part of the game. So the American industry, I don't know. I don't know what's happening. On the monthly time frame, oil is now okay. We are retracing currently at the moment, which is something we'll want to look at. Because if oil goes below 60, that means it's chaos. It's going to be chaos. Yes, it's going to be good for consumers, but generally for the economy, because oil runs an economy, it's going to be very dangerous for people who are producing this oil. So we are seeing currently it trade at $62 a barrel. This is Brent oil. So this is UK, but WTI is trading at 59. If it does close below $60 a barrel, we are going to be triggering a lot of strip mines in the near future, whereby we want to see these prices because there has to be a perfect balance between low prices and high prices. If you see at Western Texas oil, we have come from highs at back in March 2022 from $125 a barrel to nearly $60 a barrel. That's nearly half the price in how many days? So we're looking at weeks here, but in less than 1,100 days, in less than 1,100 days, the markets have tanked nearly half in terms of oil prices. Now, looking at the dollar index is a basket of 6 currencies against the USD, and this is what we are seeing currently at the moment. And it's very crucial for us to pay attention to the DXY because the US 500 did recover, Nasdaq did recover, US 30 recovered a bit, Russell did recover. But when you look at the dollar index, it was tanking. What does this mean? The dollar index is a measure of how the economy in the United States is roughly performing. So if there is downward pressure on the dollar index, it means that look at this gap that has just opened today. The gap that opened with gold, I want you to pay attention to how these markets are intercorrelated. So if you look at gold, it did open with a gap, a small gap, very miniature gap. You cannot see it. So with this asset, it doesn't show. But if I can go to another broker, if you open another broker, you'll see that gold opened with a gap. So this is on the monthly. If I can go to the daily. And this is something to note out with other brokers. Huh? So look at this one. This one opened with a significant gap. Yes, you can tell that there is a gap between this price and this price. Huh? But if you look at this asset, there is no gap between, oh my lord, what have I done? Anyway, there is no gap between this price and this price. So sometimes it's very cautious to be looking at what liquidity provider you're using. So when I was at the VIX, no, the dollar index, I was at the dollar index. Look at this. The dollar index is currently trading at 99, meaning that the United States dollar, there's still fear roaming around the market about the uncertainty because the tariffs are still there. And China, so as of today morning, China, I do believe their tariffs was at 124%. So let's use CNBC. So China raises a retaliatory levies on US goods to $125, 125%, sorry, as the dollar sinks. Um, so Trump administration clarified yesterday that US duties on Beijing are actually 145%. President Donald Trump said late yesterday that he was not tracking a fall in the stock market as he met with his cabinet secretaries amid worsening trade tensions with China. The US dollar was at a 3 year low against the euro, and gold, a haven asset for worried investors, was near all time highs. So, this was a few minutes ago. Currently, yeah, we are at all time highs. At the same time, Trump acknowledged that his tariffs will pose transition problems, but maintained that he thinks his policies will ultimately help the United States. The president is scheduled to have a physical exam at Walter Reed National Military Medical Center. The 78-year-old has been opaque in the past about. Okay. Now, this is not the first time I've seen such a thing. I remember, and it has to do with politics, huh? It has to do with politics. Whenever you're trying to do something that is going to impact a lot of people, people usually question your sanity. Like, is this guy okay? Hmm? Are you okay? And it's all about politics, whereby even our parents at home, like it's psychology, it's natural psychology. If you do something, your parents will be like, are you using something nowadays? you know so this is very interesting. I'll keep note about this. I'll keep note about this statement here. So moving on to 47 minutes ago, our US dollar, yeah, it's tanking. The fear right now in the markets are so aggressive. It's so aggressive. Now looking at the volatility index, could we have spiked here? Whoa. So volatility index has spiked today, starting off at we did the day opened at 40. Right now we are at 44, meaning there's a 44% chance the markets can go either way in the next 1 year. Looking at Bitcoin USD, Bitcoin has started recovering. Very interesting. Did it pay? Did it respect the Fibonacci? I do believe so, whereby it closed in between the 50% region and the 61.8%, and the market has gained. Now, this is the good thing about trading, whereby you can be participating in these short-term probabilities. Now, looking at US dollar against Chinese yuan, we did mention the last time we were here was quite some time back. If I can look at the 3 month time frame, so the last time we were here was back in 2023, but before that was back in 2007, 2008 during the financial crash. Now, looking at how this monthly candlestick is opening up, I want to take note of what is happening currently at the moment, whereby we see these two daily candlesticks, a lot of bearish momentum in the financial markets, whereby bears are competing with the bulls. We have seen nearly 0.78% of US dollar losing its value against the Chinese yuan. When you're looking at other assets like Euro USD, this was a really good trade. It did hit TP yesterday. Very interesting, and I'm very proud because we did analyze this position together with you guys. Now, moving on over to GBP USD, the same thing can be said whereby the US dollar is losing against other assets because people are looking into much safer havens that doesn't have a lot of political tensions tied to it. Okay, so people will look at, okay, we need to go where there's minimal noise, huh? Which could be euro, British pound, the Japanese yen. If you look at USD JPY, the Japanese yen has been gaining against the United States dollar because people perceive the Japanese yen right now as a safe haven compared to the United States dollar. So you can be trading fundamental news releases with currencies. It's very easy for you to look at these probabilities. You just look at yourself and ask yourself, okay, there are two things I can do here. I can either buy, I can either sell the market. Where I am currently at the moment, what are the probabilities that the markets will favor selling more than buying? So if you're looking at this, you just look at sentiment. People are afraid right now. So people will flock to other currencies, buy those safer havens compared to where there is potential of pull tug of war, so to say. So if you look at USD Swiss franc, most of the currencies are currently tanking against the United States dollar because people perceive other assets safer haven compared. Okay, so New Zealand dollar. Now the New Zealand dollar is gaining against USD, even though the New Zealand dollar did lower their interest rates this week. It was this week. I do believe it was Tuesday. It was Wednesday morning, whereby they did lower the interest rates to around 350 basis points. But looking at New Zealand dollar, it's also gaining against the United States dollar because people are perceiving this information as negative. This one is almost about hitting take profit. This is very interesting. For a risk to reward ratio of 1 is to 4.5. Now, this is the strategy I teach so much. A very simple but yet very effective strategy that you can be executing in the financial marketplace, whereby you just look at Monday. So this was Monday. Monday opens, forms the low of the week, find the opportunity Tuesday, ride the whole thing to Friday. So Australian dollar against USD, something happened. So the King's Print did work on all of the assets this week. Nikkei 225. Okay, so Nikkei 225, we have been tagged in with this position. So whenever I do analysis, I do set them on my Meta, and then I just monitor them from my phone. It's much easier because this is the only assets I'm going to be looking at. I don't trade stocks on Meta. It's kind of different. But looking at Tesla, Tesla is we have seen a we have seen Tesla regaining its confidence back in the past few. So going back to gold, on this chart. Where is it? I do believe it's this one. So we have 37 minutes to go. Let's see what these will have in store for us. So let me go down to the 5 minute time frame. So if we do break above 3240, I'll be looking to advance my stop loss into break even. In the meantime, let me engage myself in a game of what? Let me remove this. I think someone from Germany. I don't believe this is Germany. Yes, sir. Ouch! Oh, painful. Very painful. How did I not say that? He enticed me. Okay. First game of the day. Okay, block mark. So this is France. Ouch. Mm, my turn. Nice. Three games. The German did humble me. The German did humble me. Oh, gold is already moving in our direction. I don't believe I need to close that position now. Simple but yet so effective, eh? You enter a position, you play three games of chess, you get out. You have a blessed weekend. $43. I cannot say no to that. I cannot say, let me screen record so that you guys know I'm not trading a bot here. Where's the screen record? You can mark the time 4:38, huh? XAUSD. Let me just close this position. I'm a go off. I'm a be on my way. So that's going to be it for me. I hope you have a spectacular weekend. Let me download the image, but this was a good opportunity, yeah? And when they zig you zag, that's basically it. So that's going to be it from me. How long have we been live streaming? Almost an hour, 4 minutes. We have had this amazing opportunity on gold that hit take profit relatively easy. Risk to reward ratio of 1:1. The week has been very active. It has been very buzzing, but we cannot say no to a few shillings here and there. We say thanks. The week has concluded. I know a lot of people are crying. I know people's retirement benefits are going to be in limbo. But once again, it's a coin. It is a coin. Just choose where you're going to cry from. Stay safe.